Hi there, on this lesson we're going to be talking about the concept of current portion of long-term loan. Right, here is the question that I received from a learner. This is extract, balance and totals from the records on 30 June 2024. So meaning that is at the end of the year. Right. Let's see our loan balance. This is our loan balance. Right. I was putting my phone on do not disturb. So this is our loan balance, and then when at the end of the year, then first thing first, let's draw our year. One, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Our year is ending in June. It has started in July, August, September, October, November, December, January, February, March, April, May. Right. And then from here to this direction is our 2024, to this direction is our 2023. So we are told that at the end of the year, which is here, our balance is how much? 1,304,000. $1,304,000. Right. And then let's check the information that we're given. The loan balance on 1 July amounted to 1,490,000. Okay. 1 July is here at the beginning of the year. The balance was 1,490,000. Right. Interest of 120,100 on the loan is capitalized. Okay. This one is just the examiner trying to confuse you. This information doesn't make any difference anywhere anyhow, because after all, this is the balance on the loan at the beginning and this is the balance at the end. So this is what we're going to use, because we're talking about the capital portion of the long-term loan. And then a fixed monthly installment including interest was paid in full and recorded. Okay, so we don't have to worry about this as well because it has been recorded, and this is not the focus. Due to economic condition, Zyno Ltd is the company we are reporting for, negotiated with OV Bank. OV Bank is the bank that we got the loan from, to extend the original term of the loan. The bank agreed to this request and thereby reducing the capital portion of the loan repayment by 5% over the next financial year. Right. How much was the capital portion that have been repaid? The difference between these two. The difference between these two. Because at the beginning of the year, it was this much. Now at the end is this much. So how much is the difference? 1,490,000 minus 1,304,000 is equal to 186. So the capital portion that has been paid for this year is 186. thousand is the capital portion that have been paid. Right. But because you have been told about the interest here, the 120, 100, it means that what has been paid actually is this plus 120, 100. So the total amount that went out of the bank paying to OV Bank is 186 plus 120, 100. So the total payment including interest is 306, 100. This is what has been paid. When you hear them saying a fixed monthly installment including interest was paid in full and recorded. So this has been paid and recorded. So we are not worried about this. We just want to know the capital portion. We just want to know the capital portion, which is 186,000, because that is what we have to record in our balance of loan. Right. And then we negotiated that. This is what we have paid for this year. Ne? So we negotiated that the bank, our finances are not really doing well. Can we please pay a little bit less? And the bank approved and say, okay, you can pay 5% less. So this multiplied by 5/100. I'm just going to do it the long way so that everyone can understand. I've realized that when I do things mathematically, majority don't understand. Multiply by 5%. We get 9,300. So meaning that the following year we are going to pay this minus this, which is going to be 186 plus minus 9300. Then 186,000. We are going to pay 176,700 next year. Right. So if you don't want to do it this long way, you can somewhere say 186. You can somewhere say 186,000 multiplied by, if they reduce by 5%, it means that I'm going to pay 95% of this. Multiply by 95 divided by 100. And then you're still going to get your 176,700, which is the payment for next year. Right, why do we need this amount of money? Because when we disclose our loan on the statement of financial position, remember the balances that you put on the statement of financial position. This is a very much important concept. Listen very carefully. The amount that you put on your statement of financial position is to say, these are the balances as at this particular date that I'm reporting on. And what is the particular date that we are reporting on? Is the 30th of June, 2024. Listen to me very carefully and make logic of this. Now, you're going to have on your liabilities, you're going to have your equity and liabilities. On your balance sheet, statement of financial position, and then you're going to have your liabilities section, and then you're going to have non-current liabilities, This is where your loan is going to be sitting. This is where your loan is going to be sitting. Loan from OV Bank. And then you're also going to have your current liabilities. And this is where your trade and other payables will be sitting. And there is this thing called current portion of long-term loan. Right. Now, I'm sorry for that. Now, whatever that you're going to be putting here, remember what is non-current liabilities. When we say something is non-current, in accounting terms, we are saying that it is not going to be due or receivable within 12 months, counting from the day that I'm reporting on. Listen to me very carefully. The information that we are reporting here, the balances that we are reporting here in our balance sheet, are the balances looking at the transaction that happened from July to June. And we report on the 30th of June. So, on this day, when we say something is current liability, we are talking about that liability not becoming payable or due within 12 months counting from this day going forward. When we say it's non-current, remember we're going to be saying statement of financial position as at 30 June. So we are saying that whatever I'm reporting is the financial position, is the state of our company, of our balances as at this date. So what I'm saying literally is that when I'm saying this is an non-current liability as at 30 June, I'm saying that today on the 30th of June, this amount of loan, I'm not going to pay it anytime between today and the 12th month. Because I'm reporting today on the 30th of June. What I'm saying is that I'm reporting today on the 30th of June. So what I'm saying is that the amount that I'm going to put here as my non-current liability as at today on the 30th of June, I'm not gonna pay it anytime within 12 months counting from today. So, the current liabilities, you are saying, every amount that I'm gonna put in here, I will be paying anytime within 12 months counting from today. So, this 176 is the installment that we're going to be paying next year. And next year is within 12 days. So, this is the balance of the loan on the 30th of June. But now, is this whole amount non-current? No, because within the coming 12 months, which is next year, we are going to pay 176,700. So meaning that within this amount, there is a current portion of 176. Is it 176,600? 176,700. 176,700, which is the current portion. So what is remaining is what we are going to pay in more than 12 months, which is going to be our non-current. Then now we say this minus this. 1,304,000 minus 176,700. You get your 1,127,300. So this is going to sit in your non-current liabilities. This is going to sit on your current liabilities. This is your current liabilities, and you have your current portion of long-term loan, which is 176,700. And here on your loan, you are going to have your 1,304,000 minus 176,700, which is your 1,127,300. And that's it. The comment section is opened. If you still need clarity, you are more than welcome.